Good day, everyone. Trust you are all doing well. Today we are going to do introduction to forex trading. That's intro to forex. All that you need to know about forex. If you are a beginner, stay tuned as I deliver. I'm going to take you through all the processes in forex trading. Do you get it? So stay tuned, and also if you have not subscribed to this channel, kindly subscribe. So introduction to forex trading. What at all is forex? What goes on in the forex market? How are you going to make money in the forex market? That's what we are going to talk about today. So what is forex trading? Forex trading is a decentralized market where people go and buy and sell currency to get profit. So all that they do is they buy and do what? And they sell to make profit. Do you get it? They buy and sell to make profit. As in our normal marketplace, like for example, when you go to a shop, a phone shop or a mall, it's either when you are buying something from there, it means the shop is selling the thing to you. Do you get it? So two things goes on there. Either you are buying or you are selling. Do you get it? For example, when you go to market, it's either you are buying something or you are selling something to someone. So that is what that goes on in the forex market. So forex is a marketplace where we go and buy or sell to make profits. Do you get it? So why do we buy and why do we sell? So let me give you a scenario. Let's say you are owner of a phone shop and currently you sell one phone at a price of $100. You sell one phone at a price of $100 and you formed an analysis and you believe that from tomorrow going, the price which is currently at $100, price of a single phone which is $100, will move to at a price of $1. So the $100 will drop to $1. Currently, you are having more of the phones. So what will you do? Are you going to wait for price to move to $1 before you start selling? No. You try as much as you can to sell all the phones at the price of $100. You try as much as you can to sell all the phones at the price of $100 so that you get enough money to buy more when price get to $1. Have you gotten the concept? So in the forex market, you only sell something when you have the intention that price is going to drop. So as I was saying, the phone was $100. You form an analysis and you saw that the price will move from $100 to $1. So you try as much as you can to sell all the phones that you have at a price of $100. So when price gets to $1, you get enough money to buy more. So in the forex market, you only sell a currency pair or a commodity when you have the intention that price will drop. So let me talk about the buy aspect. Let's say you are again in a phone shop. Do you get it? Currently, you are selling one phone at, let's say, you are selling one phone at $100. And you formed an analysis that the phone which is currently at $100, from next week going, the phone price will move to $1,000. The phone price will move to $1,000. So what will you do? You try and buy more of the phones now at $100 because if you wait and you get to $1,000, you buy one phone at $1,000. So you try and buy more phone now at a price of $100 Do you get it? So when price move or shoot to $1,000, that time you have more funds and you can sell it at $1,000 to make profits. So you get the concept. So in the forex market, you only buy when you have the intention that price will rise. Do you get the concept now? You only buy when you have the intention that price will rise. So in summary, we buy when we have the intention that price will do what? Will rise. And we sell when we have the intention that price will do what? Will drop. So this is what you'll be doing in the forex market. You'll be buying and selling. So all that you'll be doing is you will form your analysis to know whether to buy or to sell. So we have a forex marketplace like the MetaTrader 4, MetaTrader 5. You form your analysis over there. You get to know whether price will rise or do what? Fall. If your analysis tells you that price is going to rise, you do what? You go and buy. If you have the intention that price is going to drop, you do what? You go and sell. So as I was giving the scenario, I was using phones for example. Bear in mind, the forex market, we are not going to trade phones, but rather we are going to trade currencies. Do you get it? We are going to trade currencies in the forex market. So these are some of the examples of currencies that we're going to see. We are going to see the USD. We are going to see the euro. We are going to see the JPY. That's the Japanese yen. We are going to see AUD, Australian dollar. We are going to see NZD. That's the New Zealand dollar. We are going to see CHF. That's the Swiss francs. We are going to see CAD. That's Canadian dollar. Do you get it? We are going to see there are plenty of them. Do you get it? There are plenty of them. So these currencies, they are paired in the forex market. You are not going to see them single like euro, like the US. They are not single. Do you get it? They are paired in the forex market. So when you go to the forex market, these are some of the things that you see. These are some of the things that you see. You see euro versus the United States dollar. So euro USD. You see something like AUD USD. Like the Australian dollar versus the United States dollar. You see like euro being paired with JPY. So euro versus Japanese yen. So you see something like USD JPY. So the US being paired with the Japanese yen. Do you get it? So let's get the concept clear over here. So let's say you go to the forex market. You are looking at euro USD. Always how the currencies are paid. Always the first currency. We have first currency and we have second currency. Do you get it? That's the quote currency and the base currency. So whenever you press on buy, it means you're expecting the first currency to gain strength over the second currency. That's the base currency to gain strength over the quote currency. Do you get it? And also the same currency, whenever you press on sell, it means you're expecting the USD to gain strength over the euro. Do you get it? We will do the practical aspect in our next video. Do you get it? This one is just a theory, so try and get the concept. Okay, so as I was saying, let me summarize it. The forex currencies are paid over there. Do you get it? So whenever you go there, you form your analysis to know whether the price of that currency will rise or fall. If the price will rise, you do what you buy. If price will drop, you do what you sell. Do you get it? You do what you sell. So how to get started in the forex market? How to get started in the forex market? Before you can trade forex, you need to have an account. You need to have a trading account. You need to have a trading account. Before you can trade forex, you need to get a trading account. And what at all is this trading account? You see, let me tell you something. In the old days, where technology weren't enough in the system, it was only rich people who were having access in the forex market. It was only rich people who were trading in the forex market. Why? Because before you trade in the forex market, sometimes you have to walk to the banks. You have to walk to the banks to buy currencies, and you have to buy more too. Do you get it? In order to get a good profit. Do you get it? So this means the forex market was limited to those who were having money. Do you get it? And also it was limited to those who were able to go to the banks. Those who were able to go to the central banks. Do you get it? So that they will go and buy and exchange their currencies, because maybe your local banks won't have these currencies. Do you get? So you have to go to the central banks. So these rich people, they came together, combined their money with huge and big investors. And the main aim of these companies is to, one, serve as intermediates. Serve as intermediates between the trader. Serve as intermediates between the trader and the central bank. So let's say, for example, this is the company. This is the company. And this is the trader. This is the trader. Do you get it? And this is the central bank. Oh, sorry. Let me do the scenario. So let's say this is the trader. This is the trader. Do you get it? This is the trader. Let's say this is the trader. Do you get it? And this is the company. This is the company. Do you get it here? This is the traders. This is the retail traders, like traders. Do you get it? And this is the company. And this is the central bank. So the company will serve as intermediate between the trader and the central bank. So you are the trader, you dey here, you are at this place. Let's say whenever you want to place a trade, when you create an account, your broker in the middle here will link your account to the central bank. They will link your account server to the central bank. So you make deposit through the broker, and the broker will send a deposit to the central bank, and it will reflect into your account. So whenever you place a trade, like whenever you buy something, you press on buy, automatically your broker has already sent the server to the central bank, so it will execute the trade automatically. When you want to close that trade, the broker will close it for you automatically. Whenever you want to sell something, your broker will sell it to the central bank for you automatically. So your broker is intermediate between the central bank and you. So this is the reason why nowadays you can stay at your home, you can stay at your comfort zone, any place, and be commanding your broker, do this, buy for me, buy this, do this. Do you get it? So when immediately you press on it, your broker will send a server to the central bank. Anything that you do, your broker will send it to the central bank. Do you get it? And the second thing is that the second aim of the broker is that to give you money in a form of leverage. We will talk about leverage in our next video. Gives you money in a form of leverage so that you can have access to the forex market. So the leverage will make it as if you are handling bigger capital. You see, as I say, give you money in the form of leverage, it doesn't mean that your broker is going to give you money, but the money will be in the form of leverage. These are some of the examples of leverage. We have 1:1,000. We will talk about leverage completely. Do you get it? We have 1:50. We have 1:100. We have 1:25. 1:2,000. So we have a lot of leverages. Do you get it? So we will talk about leverage in our next video. Do you get it? So before you create you begin to trade, you need to get a broker account. So you create an account with the broker, you register with the broker, and the broker will link your account to the central bank server. So anything that you do, your broker will execute the trade for you. So in forex, let me tell you, since you'll be doing deposit through your broker, you'll be doing withdrawals through your broker, it means it's only your broker that can scam you. It's only your broker that can scam you. So you need to get a good and reliable broker. There are a lot of good brokers in the system. A lot of good and reliable brokers in the system. Do you get it? Brokers that will execute your transaction faster. Do you get it? So these are some of the brokers that I recommend to you guys. If you are in Ghana or Africa, I'll recommend Xness. I'll recommend Hot Forex. I'll recommend FSTM. Yeah. I'll recommend how do you call it? Eagle Forex. We have Eagle Forex. Do you get it? Very good. But the one I will recommend all of you to use is Xness. Do you get it? That's what I recommend for my students. So I recommend you guys to get registered on Xness. Do you get it? Try and get registered on Xness. It's very good broker. Get registered on Xness. I'll drop a link in the description section. In the description section. Do you get it? So when you go there, you click on the link and it will direct you to the site, so you can go ahead and register and verify your account, and you begin to trade. Do you get it? I'll be taking you guys through the step-by-step processes about how to trade the forex market. We are going to go through everything, the technical aspect, everything. Do you get it? So kindly subscribe to the YouTube channel and like, share, and comment. Okay, thanks for joining.